Hey there traders, this is Chris Keene from KeenPointOfView.com, and this is Currency Watch. We're just going to look at two pairs tonight heading into the Asian and European trading, and that's going to be the EURUSD and the AUDUSD. The Aussie was a star trading last night with the release where the Reserve Bank of Australia decided to lower interest rates by 25 basis points, which normally would make the pair move down in value. But after the release, they did seem to hint to the fact that they might be on a wait-and-see mode about future interest rate reductions to see how the new liquidity is filtering through the markets, and they're a little bit probably hesitant about all the issues occurring in the United States with the fiscal cliff and with Europe and so forth. So that pushes the Aussie USD in an interesting spot, because now the pair has moved after breaking through the trend line, the rising trend line from last week. We'll look on this on a daily chart. After breaking through that trend line, you can see that the pair did move down, but it couldn't have any follow through, and 104 did cap the price action. So if we go back to the 4-hour chart, you can see that now the cross is right back in the consolidation zone that it spent most of the week last weekend between 104.85 and 104.35. But you could also see that the pair didn't just randomly stop at any location. It reversed right at the trend line that it had acted as support, which now may be acting as resistance. And the thing about the Aussie is it has lots of resistance stacked right up above it. You can see if you can on a daily chart that it has daily price support right here at 104.85, but then it also has additional daily price support, and I moved this earlier, at 105.50, scattered up to about 106.30. And so and then it also has, the most importantly, this descending trend line right here that has capped the price action ever since for over a year. It sees it goes all the way back to the last year, and it's been tested not once, twice, but it looks like it could be going up for the third test here. But we do have third test here, and we'll see exactly if we get a push or break. So you can see there is a staggered resistance here between 105.50, trendline resistance about 105.30, and then there's daily price resistance at 106.30, and we also have the resistance zone here at 104.85. So the path of least resistance isn't to the top side, but if we today, with the release of the GDP report, which I believe is supposed to be 3.1%, if we do somehow break above that number, break above this trend line, we could definitely be looking for a larger move higher in the short term. It would take to resume the move higher, obviously we'd have to break once again below this 104.35 to resume the move lower. The last pair we're going to look at, or the other pair, is the EURUSD, and you can see this pair is also moving up higher. It did manage to break between that resistance zone that had capped it last week at 130, 130.20, and you can see the pair has basically moved up almost in a straight line for the last 2-3 weeks. But the pair is overbought on the 4-hour charts on the RSI, and of course that could continue for quite some time, but it does indicate that we may have a pullback in the cards. If we move down to a smaller time frame, you can see that the cross is stopping right here at that descending trend line, and so it's going to be interesting to see which way the pair breaks below this 130.20, or if it gets a solid break above the 131 level, which would open the cross up to a higher move. So we'll have to watch this, and I would like to see a sell signal for a push down lower to probably get up, relieve itself of some of this overbought pressure. If you want to start receiving the wake up call, which is a video similar to this, but we go over all the majors and some of the yen pairs every morning, register today. The first week is free. It's right underneath this blog. All right, everybody, have a great day trading. Remember to keep your trades keen and to play it safe.